This presentation contains forward-looking statements and other disclosures which investors are expected to review before proceeding. Any projections, strategies, or expectations discussed are inherently uncertain and subject to material risks outlined below, on screen, and in Datacentrex SEC filings. Hey guys, welcome back to the channel McNallie Money, your home of all things stock, investment, and personal finance related. In today's video, we're pleased to welcome the CEO of Datacentrex, Parker Scott, to the program for his very first time. We're looking forward to learning more about revenue, forward outlook, and strategy in 2026. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel, specifically in getting this content to other people like yourself who may find value. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you've heard of Datacentrex before or you're currently holding shares. With that being said, let's get into today's interview. All right, guys, away we go. An exciting interview for you. We've got the CEO, Parker Scott of Datacentrex on the channel. This is your first time on the program, Parker. I wanted to welcome you. Happy New Year. Thanks so much for taking the time today.
Yeah, thanks for having me. Happy to be here to tell the broader story of Datacentrex and try to get the word out.
Most definitely. So this is an interesting story. We've actually covered Thumbs Up Media on the channel a few years back. You guys have rebranded now, obviously went through the DOGE hash acquisition. Can you talk to us a little bit about this transaction and how this positions this new company moving forward?
Yeah, absolutely. So it might be a little bit confusing to some, legacy shareholders and shareholders that are just getting into the story, but a little bit of background on where we were as Thumbs Up and where we're now going as Datacentrex is that Thumbs Up used to be, and still is, we still actually own it as a wholly owned subsidiary, of course. It is a burgeoning ad tech platform that was effectively built to connect large scale advertisers with grassroots effective social media influence posters. That business is still going and we're still working on it. But along the way, Thumbs Up figured that it might be a good idea to take initial foray into the DAT treasury strategy. So back in early July, it was able to go out and raise a decent amount of capital to pursue that strategy, specifically focused on a DAT around Dogecoin as well as Bitcoin. At the time, they were able to raise some money, but as the old legacy company realized that was effectively just a play in the financial markets. The space was extremely hot at the time and it wasn't really durable from a revenue standpoint. So they ended up looking around and we got connected because they wanted to take a further deep dive into what is cryptocurrency mining. And obviously us at the time as Doge Hash had a very unique play on the cryptocurrency mining space. We were focused specifically on script mining rather than entering a space that's very saturated with a number of other Bitcoin players. And we thought that brings a fresh look to the market, brings a lot higher profitability when compared on a kilowatt per hour use basis and other things. So now we've obviously gotten that transaction done. We have since rebranded to the name Datacentrex and we're going forward from there.
Yeah, I really like the rebrand and the new name. Now, you mentioned you were able to pick up a few different components as part of this transaction. The underlying business, Thumbs Up held Bitcoin on the balance sheet, I believe, as well. What did Datacentrex acquire through Doge Hash transaction, and how do these assets kind of set you guys up?
Yeah, so what we specifically, or Thumbs Up specifically acquired through the Doge Hash transaction was every single asset on the Doge Hash balance sheet, including proprietary software systems to monitor and scale miners in the script space efficiently. So what they did acquire is about 3,100 currently hashing script rigs at 4 diversified co-location sites all across North America. So they were able to effectively buy pre-bought revenue, hash rate, EBITDA flow through, and also a really good look into what would be future deployments in the space. So they were able to pick up all this hardware industry access to new hardware, and fully deployed revenue, compute, scale, etc.
Gotcha. Now, the name itself, Datacentrex, how does this better reflect the company's focus and, I guess, downstream business in 26?
Yeah, it's a great question because obviously we were Doge Hash. Now we're rebranding to Datacentrex. And to be completely honest, what we're really focusing now and what we really wanted to try to pound the table on is we are not a Dogecoin centric miner. We are a low cost cryptocurrency miner. And all we've recognized is that there's a relatively significant spread in terms of profitability between mining Doge, but that doesn't also mean you have to hold Doge. So I can talk a little bit later about our treasury strategy and why it's unique. But the whole reason and the pivot to Datacentrex is we want to be focused on what we're doing now, which we are a low cost cryptocurrency miner. Then we also want to look to the future. And what we've obviously recognized in the industry is everyone's getting rewarded based off of moving into spaces with further EBITDA, EV to EBITDA multiple expansion, which is AI HPC. And so obviously our rebrand to the new Datacentrex, I think reflects that, given that we were able to obviously inherit an extremely, like a very viable balance sheet in the form of $45 million of cash. We're focused on industry acquisitions that are adjacent to the cryptocurrency mining sector going forward. So, as we're looking at into the future, we're thinking about, maintaining our current business, but also figuring out what is the highest and best use case of the electron right now in the public markets? And that is upstream in the form of AI HPC. So we're looking into all forms of power acquisition, AI HPC, as well as cryptocurrency mining. So we didn't really want to be pigeonholed as much. And I think Datacentrex really represents that thesis a lot better than Doge Hash.
Yeah, very cool. And I definitely agree. Now, you mentioned you've got 3 co-located facilities currently. I wanted to talk to you about expansion potential in terms of mining rigs themselves, these script miners. Any targets for 2026, or what is your total capacity? And then building on the point you just mentioned about this pivot to HPC AI, will we ever see a space or a time where you guys are looking to actually own the data center itself, run GPUs, or is this a little bit far out of sight at this point?
Yeah, good question. In terms of our co-location size right now, we actually have 4 co-location sites distributed amongst the US. And we did that on purpose. Obviously, every single load zone within the continental United States is very different, right? You're playing both the wholesale markets and the ERCOT grid, MISO grid, Georgia Power. Obviously, all of that power demand modulates a lot differently. So we didn't want to concentrate in one location. And we actually, because of us doing that, it's allowed us to maintain a 95% operational uptime with our existing footprint, which I think is really competitive in the industry. And when we think about our capability to scale in the next 12 months and looking forward into 2026, we actually already have a deposit down for another 1,000 next generation script rigs that no one in the world actually has access to in scale yet. So once we get access to those, we're going to be the highest efficiency metrics in the space, and we'll very quickly be able to deploy those at scale. We have plenty of access to power, so we're not really worried about that going forward, especially because of our scale. We're not competing with the hyperscalers or TeraWulf or Riot. Like, we're not competing with the big guys. We kind of think of ourselves as a little barbarian at the gate, and we're able to be very opportunistic in the power markets, able to scoop up, 10, 20, 30 megawatts here and there, where that previously might have been overlooked because a lot of the hyperscalers are laser focused on gigawatts now, seemingly not megawatts. And when you think about, as we're pivoting into what we want to kind of be doing in the future and what we want to be looking to in the future, we're not interested in, doing greenfield development, because obviously the market is rewarding the people who are actually deploying IT compute at scale right now and actually getting it online. You see, obviously, the larger players like Core Scientific, CoreWeave, they're starting to get punished a little bit because simply they're just not being able to upsize into their current projections. But the guys who have compute online, like TeraWulf, they're getting very well rewarded with bringing some form of compute online. So with our cash balance, we're looking to find fully bought IT load and IT compute. And what we're recognizing, and fundamental there's a fundamental shift that's going on right now between the private market valuation for these companies and these builds and the public company multiples for these builds. And we think that we can kind of serve as a really decent opportunity for us to potentially roll these things up and find the smaller projects that are online, hashing, has a client. And as you know, these long-term AI HPC clients are more of like a 10 to 15 year term. So what happens is these developers are really looking at it from like a project finance perspective. So they effectively do these builds, get someone in there, and then they essentially try to roll on to bigger and better projects to keep up with the insatiable desire that exists in the form of the hyperscalers. So for us, we think that we can look opportunistically into the private markets and purchase these companies that are already running IT compute at scale, and we can probably pick that up for a discount and then get it re-rated in the public markets. And then more importantly, again, if you look at the public markets, you recognize that there's an insatiable demand for these projects right now from the debt capital markets. So a lot of these larger hyperscalers are looking at these debt notes and getting 0% coupon notes, low coupon notes. It's absolutely crazy. But in the private markets, these smaller developers, in order to bring these sites online, they have to deal with relatively predatory debt notes. So from our perspective, we think we can come in, purchase private AI HPC companies, re-rate them into the public markets, and then also take a look at their cap stack and their debt structure and potentially recap their debt and immediately turn those IRR projects that might be showing like a 7 to a 9 handle. We think we can convert it to like an 18 to a 20 handle. So simply by looking at that private to the public market play and looking at the size that we're working with, we think that we can take our cash balance that we're currently sitting on, move into that space at scale, and immediately start to throw off EBITDA for the shareholders.
Yeah, that's awesome. Well said. And we talk a lot with the HPC AI data center companies on this channel. And you're right, that seems to be the best value or revenue generation per megawatt at this point in time. Now, you talk about the HPC data center side of the business. Obviously, the script mining is crucial or critical to the operations at this point. Can you talk to us a little bit about the differences between script mining versus Bitcoin mining, and how do these algorithms themselves differ in terms of profitability?
Yeah, absolutely. So from a real quick standpoint of understanding the true differences between what is script and what is SHA-256, which is the underlying algorithm used to mine Bitcoin, we can start there. And really, script is a completely separate proof of work mining algorithm used, and it's predominantly used to validate blocks on the Litecoin and Dogecoin network. And keep in mind that the ASICs that are mining SHA-256, i.e. Bitcoin, versus the ASICs that are mining script are not interchangeable in any way, shape, or form. So if there's a larger industry incumbent that looks at the profitability of our rigs when the profitability of their rigs might be a little lower, it's very difficult to get into this space because, to be honest, there's a significant amount of hardware constraints that go along with it. There are not only hardware constraints that go along with it, but there's also power constraints that go along with it. A lot of these data center sites that people have previously built up for cryptocurrency have a very tight operating window or a spec window for each unit. And these script rigs are a little bit different in terms of their power demands. And as a result of that difference, if you're a large industry incumbent and you wanted to get into our space, you not only have to go out and buy all new hardware, but you have to retrofit your power footprint in order to do that. So we believe that getting into that market, it gives us a nice little strategic moat to insulate us from the larger players who might look at our spreads and say, wow, they're doing it a lot better per unit of kilowatt energy deployed than we are. And something that's also really important to note in the mining differential between Bitcoin and script is that it's a much more stable reward structure. And what I know by what I mean by that is everyone knows every 4 years you experience the halvening with Bitcoin mining, but that doesn't actually exist in the Script network. So fortunately for us, we don't have this looming cliff sitting over our hands, knowing that every 4 years your margins are going to get hacked up in half. So for us, we recognize that that was an absolute no-brainer to move into that space instead of Bitcoin because A, it's a lot less crowded. B, we've got a strategic moat in the form of our power footprint and our hardware footprint. And C, we've got a lot more stable revenue per return profile when compared to the people who suffer from having to deal with a halvening every 4 years.
Yeah, it's an interesting approach. And like you said, you can immediately take that Doge or Litecoin and convert it into Bitcoin if you wish as well. And that's kind of a nice segue into the digital asset treasury strategy here. You mentioned earlier we saw a ton of these DATs pop up throughout 2025. A lot of them really didn't have an underlying business associated with them. And as you say, are now running into revenue challenges. Can you talk to us about your guys' dynamic treasury strategy and how this positions you compared to some of these DATs?
Yeah, absolutely. And so when we actually looked at our profitability per unit of profit, when correlated to the kilowatt of energy deployed, we recognized that Script made more money 88% of the time over the past couple years. But what we also recognized is what is the true best long-term store of value for our balance sheet, right? If we're going to be hodling cryptocurrency, which we are, we want to figure out which one is the most durable, stable, and serves as a solid form of storage value going in the future. So what we did is we looked at a couple of case studies and we recognized 3 different scenarios. What we would be doing is if we took a single one of our Script rigs, mined every single day with it, took our profits and either deployed it into US dollars, deployed it all into Dogecoin, or deployed it all into Bitcoin. And what we recognized over a 2.5 to 3 year period is that Bitcoin as a medium of exchange is much more durable when compared to either A, the US dollar, which has no appreciation, or B, Dogecoin, which has a good amount of appreciation, but it's hyper volatile. So for an investor base, we recognize that it might not be the best store of value going forward. Hence the reason we've honestly shifted our entire corporate mantra from being, a Doge-centric miner is we are utilizing Doge as a vessel to be the most profitable miner on this, one of the most profitable miners on the street, but we don't actually have to have the downfalls associated with holding onto a more volatile cryptocurrency like Doge. And so when we thought to ourselves, how do we actually hold on to Bitcoin as a treasury asset a lot more than Doge? You have to think about, okay, how do we take our mining and our hash rate and effectively convert it into the value currency that we want, which is Bitcoin. And so what we recognized is what we should do is instead of participating in a normal mining pool where generally speaking, you group all your miners together, they take anywhere from a 2 to 3% spread on your hash rate right off the top. They give you your earnings. And in the form of merge mining, we're not only getting paid in Litecoin or Dogecoin, but we're getting paid in a lot of alternative currencies as well. And then if we wanted to convert that into Bitcoin, we would then have to go back onto the marketplace, pay more fees associated with that conversion, and lose money on the spread as well. So what we recognized is we can partner with a hash rate marketplace and effectively pre-sell our hash rate into this marketplace. And the medium of exchange just happens to be Bitcoin. So instead of involving yourself in a true mining pool and getting skimmed along the way, we recognize that we can partner with a hash rate marketplace instead and get paid out directly in Bitcoin, which allows us to take the medium of the value of our core balance sheet asset, which is what we want it to be, is Bitcoin right off the bat. And we don't have to get skimmed along the way in terms of the trading fees and the spread expense.
Makes sense. Yeah, and that's really a perfect segue into my last question for you here. Talking about go forward 2026, any potential catalysts or what should investors be watching for from Datacentrex?
Yeah, I mean, as I think we look into 2026, right? This is a really exciting time to be taking a look at our stock because we effectively right now as a DOGE subsidiary has always been cash flow positive and EBITDA positive. So that's been great. And so we get to sit here, and while we're kind of sitting in a down crypto environment, we still get to be participants in the space. We're not curtailing, we're still making money. And so as we look into what might happen at the Federal Reserve, inflation in 2026, I think people can obviously speculate about what might be happening in Bitcoin and how that's going to impact the alternatives in that asset class going forward. And so you kind of think about our core business as like a free option, so to speak, right? Right now we're trading right at around book value. And so we're extremely cheap in the marketplace. And that's, again, just if we were to take the book value of our assets. So we're not thinking about any of the upside of what could happen with our mining segment. And then also, when you think about what's going on in 2026, we don't want to just sit on our extremely strong cash balance. We want to deploy that into accretive deals for investors. And that's what we're really focused on. I mean, in our deck, I kind of tease out the fact of what we're really looking into is an industry where it has EV to EBITDA multiples that are anywhere from 20 to 30x on average. So we're thinking if we can deploy our funds in an advantageous way into the private markets and come out with a deal that would immediately re-rate us and our EBITDA to those multiples, I think we're going to see an absolute explosion in our market cap. So we're really looking forward to that. And I mean, when you think about the whole AI HPC trade in 2026, yes, the market might be a little bit wary, so to speak, of this entire trade, but that's not as a result of the fundamentals in any way, shape, or form. I mean, we're literally sitting at an all-time low North American colocation rate of under 2.3%. The pre-build lease percentage is at the highest it's ever been at 73%. The revenue per kilowatt per month in these data center builds are the highest I've ever seen them at around $165 per kilowatt per month. So I'm thinking we're going to be able to deploy our cash balance to pick up something that's really going to excite investors. And I think everyone just has to have their eyes on the horizon for us in 2026 because we've got a lot of really exciting things to look forward to.
Most definitely, yeah. And you see those CapEx forecasts for the hyperscalers continuing to increase the spending on AI HPC compute. So I think you hit the nail on the head there. And very interesting angle on that arbitrage between the public-private valuations of these megawatts. So I look forward to having you back soon, Parker. We can talk about some of these updates, the strategy as it progresses. You guys, if you'd like to find out some more information, obviously the company website linked below. If you have any questions for Parker and team, leave them in the comment section. Hit the like button. Feel free to subscribe. And again, we appreciate your time today.